Financial planners, are they worth it? 99% of Americans do not have a financial advisor. If you're part of that group, are you missing out, or are you better off not having one because financial advisors are just out there to take your money, judge you for your past mistakes, and try to sell you products that you don't really need? And by the way, aren't financial advisors only for the super rich? Or will they actually make you rich? In this video, I'm going to be sharing 3 points that will help answer the question, are financial planners worth your money? And I will also share a bonus tip at the end. Number 1, what is the value of working with an expert? So a few months ago, I decided to learn how to play tennis so I can remain active during this pandemic and be able to interact with people in a safe way. So I wanted to do it right, and I decided to hire a tennis coach. So we've been meeting weekly. My coach has been teaching me how to do forehand, backhand, volleys, service. And interestingly enough, after 2.5 months of working with my tennis coach, I found myself being able to play with my friends who've been playing for years. And so I'm getting a lot of value from working with an expert, in this case, my tennis coach. I could have learned on my own, but I think it would have taken me years, and I would probably have developed bad habits and not have learned how to do the right techniques. So think about where in your life have you benefited from working with an expert. So let me know in the comment section. We work with specialists all the time. So one of the things that prevent people from hiring a financial planner is the cost involved in hiring one. But let's think about for a second, what is the cost of not hiring a financial planner? So let's say you didn't contribute to your 401k in your past jobs. You probably left money on the table. So let's say you're making $100,000 for the past 3 years and your employer was doing 3% matching contributions. Then you lost the opportunity to have $9,000 in free money. Now, let's say you did sign up for your 401k, but you decided to copy your coworker's 401k allocation and you ended up investing in high fees. Well, that's also going to cost you money. In this graph, we can see that if you invested $10,000 over 40 years, and if you invested it in a high fee fund, then that fund is going to collect close to $40,000 in fees from your account over a span of 40 years, instead of just collecting maybe $8,000 if you invested it in a low fee fund. Let's say you're a natural saver and you've been saving $5,000 each year in a regular brokerage account, and you did not invest it in a Roth or a backdoor Roth IRA. Well, your money would still have grown in this graph if you made on the average 6% return over the next 30 years, putting in $5,000 a year. Then you would have made around $250,000 in gains. If you just invested that in a regular brokerage account, then that $250,000 in gains, you're going to have to pay maybe $37,000 in capital gains taxes. Versus if you did it correctly and invested it in a tax-free manner, then you would not have to pay capital gains tax at all. What if you invested in individual stocks instead of investing it in a diversified low-cost fund? Well, let me give you an example. A couple of weeks ago, there was an article that appeared in Business Week where someone took the advice of a Morgan Stanley broker, invested in this stock called Luckin Coffee, which was supposed to be the next Starbucks of China. It was experiencing explosive growth. But lo and behold, that company, Luckin Coffee, was actually involved in fraudulent accounting. The stock plummeted. This person who took that broker's advice and invested it in one stock lost $85,000. So that's just really sad. If you have $100,000 in federal student loan debt and you work for the government or the nonprofit sector and you're banking on doing the public service loan forgiveness program, and you didn't file the right paperwork throughout all those years, and instead of having a zero balance at the end of 10 years, you still have that probably now more than $100,000 in student loan debt, then that's a lot of money. The cost of that is huge. So what is the cost of not having a financial planner? That's probably in the tune of tens of thousands of dollars. And that's just the tangible costs. What about the intangible costs? Well, money fights are the second leading cause of divorce behind infidelity. And what about everyone's goal of being able to retire early? Which brings us to number 3. What are the benefits of working with a financial planner? Let me share with you 2 studies. The first one was done by Vanguard back in 2016, and they identified 4 factors that a financial planner provides value on. The first is low-cost construction of a portfolio. We talked about low fees. And the second one is rebalancing, which is making changes over time depending on market conditions in your 401k and IRA. The third one is tax efficiency, which is investing in the right vehicles in the right moment such that your tax burden is lowered. And the fourth one is behavioral coaching, which is essentially helping you make smart financial decisions. And according to Vanguard's study, these 4 benefits combined is approximately worth 3% of your assets. So for example, if you have $200,000 in your 401k, IRA, or brokerage account, 3% of that is $6,000. So that's the value that your financial planner provides you. So if you're paying your financial advisor $3,000, for example, so you're way ahead. The second study that I wanted to share is the one that appeared several years ago in the Journal of Financial Planning, where they followed 12,000 Americans over a span of 15 years. And this study showed that those who had a comprehensive financial plan in place built up to 4 times more wealth than those who did not have a plan. And that group generated about $150,000 more in wealth over time. So those are hard and fast, tangible benefits that a financial planner provides based on these 2 studies. And in addition to that, there are also intangible benefits from working with a financial planner. A lot of us have goals that we want to achieve in our life, from being debt-free to buying a house, traveling each year to different places, and a financial planner can help you achieve all of those goals. Let me ask you this: what's the price tag on having peace of mind, having confidence that you're on track so that you'll be able to retire in your 60s or in your 50s, and providing for your loved ones and just making smart financial decisions? I personally feel that working with a financial planner and having a comprehensive financial plan in place is one of the best investments you can make for yourself, for your future self, and for your loved ones. Here comes the bonus tip. We talked about how financial planners may actually be worth it, but not all financial advisors are the same. In fact, financial advisors are one of the least trusted professions in this country. Each year, Gallup conducts a survey on the most and least trusted professions. In America, nurses actually consistently rank as the top profession that's most trusted by people for 18 years in a row. So cheers to all my nurse friends out there. Guess where financial advisors are in the ranking? Well, they're towards all the way at the bottom, along with car salesmen and members of Congress. People do not trust financial advisors. Speaking as a layperson, I can actually relate to that. When I go to networking events and I see someone in the finance industry profession, my instinct is to actually avoid eye contact and pivot and go to the opposite direction. And I think in my mind, there are 2 types of financial advisors. One is an aggressive salesperson who's gonna try to sell me products that I don't really need, or someone who only works with high net worth folks and will either judge me or belittle me if I don't have like $2 million. So that's the typical impression that I think people have about financial advisors. And I think the reason why that's the case is because most of the financial advisors that we encounter are not fiduciaries. So a fiduciary is someone who acts in your best interest. So for example, if your doctor prescribes you a medicine, you're not sitting there wondering whether this doctor is going to get a kickback from you purchasing that medicine, right? You know that your doctor is there to help you heal your illness. But unfortunately, that's not the common case in the industry. Only a small fraction of us financial advisors act as fiduciaries, and most of them will have conflicts of interest. How crazy is that? So, if financial planners are worth it, but not all financial planners are the same, how do we find good financial advisors? Watch our next video.